Okay, and we're live. So hi everybody, Christian Peverelli here from We Are No Code. Really excited to bring the stream today to all of you. I'm accompanied by Mikal Khoso, who's, wait, just one second, I'm checking my, let me just triple check that we are indeed live and that everything is happening as planned, because I received a notification and we are live. So that's a great start to the stream. I wanted to introduce my friend and VC investor Mikal Khoso. He is a really awesome investor who works for WaveMaker here in Los Angeles. Prior to that, he had several investment roles at different investment firms, including working at Dorm Room Fund and at Underscore VC. So welcome to the show, Mikal. Thanks for joining us.
Absolutely. Thanks for having me in this new streaming Zoom reality.
Yeah, it's actually a pretty interesting time for all those things, the crazy growth that Zoom has gone through. Actually, I heard a number like, going from 10 million to 100 million in like a month, daily active users.
200 million.
200 million now. Whoa.
Yeah.
I followed it early on.
So whoever is running their servers and DevOps is a hero.
Yeah, absolutely. So let's start talking a little bit. Why don't you introduce sort of what you do at WaveMaker, what you guys' thesis is, what kind of companies you invest in, and then we'll jump into some of the other exciting stuff, talking about sort of the arming the rebels. We'll talk about a bit about fundraising, about no code, and see where this thing takes us.
Yeah, absolutely. So WaveMaker is a cross-border venture capital fund dual headquartered in Singapore and LA. So we invest across 15 countries in Asia and the US, from pre-seed to Series A. Pretty agnostically, but we have focused generally in the last couple of years on cutting-edge technology and then obscure problems. So we get pretty excited about investing in, weird industries, if you will, manufacturing, industrials, where there are pretty profound problems, but you wouldn't know about it unless you've experienced it directly. But we're pretty open, and we touch a lot of things, everything from consumer to enterprise to hardware to software. We really take things on a case-by-case basis. In terms of my role, I spend a lot of time sourcing and diligencing companies here in the US, and look pretty agnostically across the country as well. We've been looking at the Midwest a lot, and I've started turning our heads to the South as well. We've actually done Zoom investments before this has started. They're founders who invested and we've never met, and we've done it over Zoom starting about 2 years ago. So it's not been a problem for us, and I think that's the case because we invest in 15 countries already. We've always realized that people can be distributed and still build interesting companies, and perhaps we don't have to meet them in person. We'll see if that holds up.
Yeah, it's definitely different times. A lot of stuff will shift from now on, but it's great to be at the forefront of what's happening in terms of like already having a system that works to be able to invest in companies overseas or maybe in the Midwest. That's super cool. So why don't we talk a little bit now about how you've seen sort of VC shift over the past 10 years. I definitely have my opinion, and I've seen a lot of stuff happen over the past 10 years, but I'd love to hear it sort of first-handedly from someone who is cutting checks for these businesses.
Yeah, I mean, it's changed a lot and it continues to change, I think, which is exciting. What's happened, I think, in the last 10, maybe 20 years is the industry has evolved from a cottage industry, sort of a small, little, obscure industry, and it's grown very significantly. Last year, $130 billion was allocated by VCs in the US alone, not even globally, which is a very significant amount of investment. And so it's shifted from a cottage industry towards a more professional industry. And the industry is starting to professionalize in the way private equity did 20 to 30 years ago. So, private equity has a very structured system on how they recruit, train, hire, what they focus on, that kind of thing.
Yeah.
The VC industry is undergoing that process. How do we recruit? How do we train? What does a career path look like? What do we focus on? And then on the flip side of that, what is our offering, if you will, to our customer, both from the limited partner and the founder side. So in the last 10 years especially, you've seen the rise of platforms and service layers and teams recruiting teams, talent teams, that kind of thing from VCs to help companies. That's new, and that's part of the industry maturing and figuring out, what is our product, what is our promise, if you will, what is our value prop besides just money. And part of that's happened because of the growth of the industry. And I think that's going to continue. A lot of those things, some may be pulled back, and maybe this crisis will spread the sort of investments more broadly because people are comfortable with Zoom investing after this. We shall see.
Yeah, that's super interesting. And when you say Zoom investing, I mean, there's still a pretty high number. I mean, you basically are still kind of, I guess, referring back to an article written by Mark Suster in 2010 about like investing in lines instead of dots. Like you're still sort of monitoring these companies over time. It's just that you're doing it from a distance, right? You're not kind of having one meeting and writing a magical check. And I'm sure, it depends, right?
Yeah.
If the round is closing, if there's a lot of pressure on that,
Yeah, I think a lot of people don't realize, even on the entrepreneur side, that every VC firm is very different. People will often ask me, "What's the formula? What do you?" And there really is no formula. Every firm is different. Every firm has different priorities. Every firm likes different things. Every firm gets nervous about different things. Every firm's internal process is different. Everyone is different. So some people will take one meeting and be good to go. I mean, that definitely does happen.
Yeah.
I think the context of that is you take a lot of the risk and fear, I think, out of a VC's mind if they can track you over time and they can see that you're, moving in the right direction consistently over time. You still might be at a low revenue or low user numbers, but if they can see you executing over time and doing it well, then that's ultimately what we're investing in, right? We're not going to build the company. Your customers are not going to build the company. You are. And if we can see the quality of execution over time and you delivering on what you say you're going to do, then that inspires confidence that whatever target you set, you will get there because we have some historical evidence that you can execute in that way now.
Very cool. Yeah. So what would it be like if you could give a bit of advice to founders in terms of what the right stage to approach VC, or even maybe the type of company that's interesting for the VC model in general? Would you have anything off the top of your head to give them as advice?
Yeah, I think the type of company, it has broadened, but it's, you want a high margin business because high margin businesses are valued with high multiples. And then you want a business that can be very large. And the reason for that is, VC portfolios require very big exits to perform well. Half, maybe more of the companies we invest in will go out of business, which is fine. That's the model. So the other companies need to pick up the slack, if you will.
Yeah.
And they need to generate significant returns. The ideal investment, you put in $1 and you get $100 back after 10 years, let's say. That's very, very difficult, but that's the ideal investment. So, the market has to be large. It has to be accessible. It shouldn't be owned by one or two massive companies that are impossible to take down, like Google, for example, in the search engine market. And then, you can't be making a 5% gross margin. It's going to be very difficult to build a very meaningful business off of that, which is why VCs love software, because the gross margin is very high. But that's not to say hardware and all these other companies are not being funded there. There's a lot more activity in that space. You get just a different type of VC focuses on that, which is to my point earlier about, what different firms focus on is very much based on their DNA. There's some firms that only do hardware, but that's the DNA of the team. That's what they love. And their focus is on that, and they're able to do that because of that.
Very cool. Yeah. And I think that people kind of forget, like a lot of founders forget that a lot of what you're doing as work as a founder, to like reaching out to a lot of these VCs or getting introductions to VCs is not the difficult part. The difficult part is coming at the right time, understanding the firm, what they invest in, understanding the check size, having all the criteria that those people are looking for, and not just going out and be like, hey, you guys are a fund that invests money in startups. Like, give me money. I have a startup. And usually, those are the same founders who come up with like no revenue. They come in with completely unprepared for what VC means, and frankly, like not understanding what VC represents, like, and what it means to really take money from VCs, right?
Yeah, I think It's you can save a lot of your own time if you do a bit of research on the VCs out there. Most VCs now do a pretty good job of, I think, writing a lot of content or tweeting a lot or having better websites than they used to. And, mining all that information for, they invest in these categories, typically at this stage, if you look at Crunchbase, and they're writing about these things, that I'm in this general area, I think it would be a good conversation. For example, we don't invest in crypto at all. We don't touch it. It's nowhere. Right? I mean, I
don't even look at it.
like 4 years ago, but I get approached a lot for that, and fortunately, I'm try to save people time and say we're not focused on this, but founders can save time by doing that research, and it's a two-way process. If you take a first meeting, it's fine to ask questions back. It should be that way. And you can do a lot of filtering in that way as well. And then the best meetings I have, the founder asks me some tough questions as well about, what we focus on, what we find exciting, what stood out in this conversation, or what are you nervous about? It's all open feedback. Everything with a grain of salt, of course.
Absolutely. Yeah, I love that about one VC told me once, he's like, I always look for founders who I would love working for, And so I think that idea of having an equal leveled conversation really inspires that kind of trust, right? Cool. Let's talk about the arming the rebels. That's a specific term that you brought up when we were talking about things we wanted to discuss. What do you mean by that, and what are you excited about?
Yeah, it's a theme that I like to focus on for a variety of reasons. I think if you look at the history of technology in the last 30 years, it's just been waves of abstraction. We've been abstracting complexity and functionality and offering it as a service, right? That's the everything as a service wave. So, if you look at the cloud, that's abstracting server space, maintenance, all of that stuff, and just offering it as an easy service. And that a lot was built on top of that. I mean, Netflix's entire infrastructure is AWS, right? Yeah. They don't have to spend money on that. They don't have to maintain that. They don't have to worry about it. And every couple of years, we abstract different things. I think the API wave we saw 5 years ago, and it's still ongoing, that's abstracting specific functionality. So Twilio, if you want to add text messaging to your platform, you don't have to build it and worry about all these specific edge cases. You can just use Twilio. Or Stripe, which is a company that's doing very well. You want to add payments, but payments is not the focus of your business. Your business might be an e-commerce product. We'll abstract that. Shopify, you want an e-commerce store, but you have no idea how to do it. Here you go, ready to go, out of the box with a few personalizations. And now I think the no-code wave is perhaps the fullest extent of that abstraction, in that it allows people to build experiences, front ends, and functionality, especially complicated functionality, without having either the technical expertise or having to invest the time. I think if you look at the amount of money a company needs to get something into the market today, it keeps dropping. The cloud made it much cheaper. And then front-end tools and frameworks made it cheaper. And now tools that are working on functionality and even more detailed front ends are making it even more possible to stand something up. And so I think that arms the rebels, right?
Yeah.
Companies that are smaller, or people, that are smaller teams, can punch above their weight and look bigger and better, even if they're not, don't have the same resources.
Yeah. And I love that. I love that because obviously, you're preaching to the choir when you talk about no code being kind of a frontier for the future of what early entrepreneurship at least will be. And if not no code, low code, right? Because there's a huge amount you can do with no code, and then you can apply certain, if you're doing an ML algorithm that you don't have access to with open source, then you might want to custom code that, right? But I think that's a really great point. It's like if we think about open source, or open source arrived and it opened up all these possibilities to arm the rebels, or to put power in the hands of even just one individual. Then we had AWS, which allowed the infrastructure to be scalable very quickly and for you to deliver that app worldwide, or the content as quickly as possible. And now with no code, it's both using tools, as you say, that are plug and play, and then also building custom tools from scratch. So there really is no reason why founders at this point, except for kind of laziness, are not coming to the table with traction or revenue. And that's really frustrating. I think like one of the most frustrating things as an entrepreneur, because I've been on both sides of the table, is basically being like, oh great, but you're not there yet, right? And so the idea is of getting rejected, but it's for a reason. And and I think with no code, it's basically this idea of like, yes, you have all these capabilities, and if you're not aware that you have these capabilities, then you probably lack the knowledge and lack the ability to be able to execute on what you're promising us as a VC, like from the VC point of view, right? It's like, well, hey, if you can't figure this out yourself, like, we don't think we can help you, kind of thing. But I love that, because right now there are so many booming companies. Some of the fastest growing companies are companies that have built tools to make it easy for other people too. So you talk about Stripe. Stripe is a perfect example of something that can integrate to everything, like through their API, you can integrate payments to any solution. But that's happening through a lot of custom integrations. And for all the integrations that don't exist, Zapier exists. And Zapier is kind of the holy grail for the no-code industry, because what it allows is for when there isn't an integration, like you can actually build out an integration, like Zapier creates all these other stuff. So I'm really excited as well about this movement. I think that basically what it's going to do is it's going to not only empower a bunch of let's call them no-coders, or a bunch of entrepreneurs, but it's also going to level the playing field for in technology in general. Suddenly people will have, like right now, people have digital powers that they're not using, that they have access to, even if they don't know how to write a line of code that allow them to do things online, which are making them not only well fit to build incredibly powerful businesses, but also more and more relevant to the current workforce that we need. So I think that all these tools are not just empowering for entrepreneurs, they're also empowering for anyone who wants to integrate and to be more powerful for an employer as well, right?
Yeah, absolutely. I mean, as an investor, why I get excited about tools that are no code or low code is that, there are a lot of things that are necessary but not sufficient for your product, that you need to have them, but they're not core to your business, right? So, if you're an e-commerce store, okay, probably not a good example, but if you're like an Airbnb, you want to text people that your room is ready or whatever, or your room has been booked. That's a nice thing to have, but it's not core to your application. The core is to have homes and allow you to find them and book them. That's the core.
Absolutely, I love that. And how many times have you seen people ignoring the core, right? Like one of the big things that I teach when in terms of like startup methodology and leveraging no code is like, go straight to the point. Like, what is the one thing that people have to do to make this a business that will work, right? And you gave a great example right now with Airbnb. If people aren't listing their houses and if people aren't booking houses, you don't have a business. Like, forget all these other things. Like, now they came out with experiences, they come out with all these other things. Forget, and usually you see founders making the mistake of like, oh, this baseline value prop doesn't work. Oh, we'll just add features. And it's like, no, you're missing the bigger picture that like this model doesn't work, right?
Yeah, I mean, and I like it as an investor because with tools that are no code, you can stand up that functionality without having to build it. You can focus your time, but also your dollars on whatever is core to your product, and you can get more distance out of those dollars instead of having to spend 100,000 on servers, which you used to have to do in 2000. Now you can just spend as you use on AWS. Instead of having to hire a mobile app developer, you can stand up a basic mobile app, pretty sophisticated mobile app, using a couple tools out there and see, do people even use this? I've been working on a mobile app for us, and if I had to build this from scratch, which is not a skill set I have, I would not have invested the time to learn because it's not super important. But I found the tool and I said, I can show our portfolio on our phone with the amount we invested, how well they're doing. That's actually useful to me. It's a nice to have, not necessarily a need to have. So I've been putting it together, and it took me like an hour using a no-code app, and it's a cool, slick thing, and we're probably going to be using it pretty actively.
Let me guess. Glide.
That is correct.
It was Glide?
Yeah.
First guess, nice. Yeah, I'm getting nerdy about all this stuff. Very cool. Yeah, I mean, it's incredible, right? It's really very empowering, and I think that that now it's just I basically don't want to see anyone trying to approach investors without traction. I want to avoid as much as possible seeing people having spent $50,000 to $100,000, even to $500,000 building things custom. And honestly, I tell people, even if you don't want to learn how to no code yourself, hire someone who knows how to no code to build this out for you, because it's going to cost a fraction of the cost. And by the way, I just want to mention, I'm not paying Mikal to say all this awesome stuff for no code, but thank you. You are definitely like, hammering in my points here.
Yeah. Well, I can say some stuff that makes me nervous if you'd like.
What?
I can say some stuff that makes me nervous, at least as an investor.
I love it. Please tell me.
So I think the thing that makes me nervous is, what is the lifetime value of no code? Right? If you stand up your product for your basic product and use it for 12 or 24 months, are you then going to build a bespoke mobile app or a bespoke experience for a lot of that? I don't think a lot of these tools will stay within an enterprise for the long term. I think they're more special projects, and then when you prove something out, they'll say, okay, let's lay down the concrete and build this properly. There was a company in Boston, which I won't name, big company. I think they were at 20 million in annual revenue run rate, and their entire functionality was built on Zapier, basically.
Yeah.
All the complex stuff was happening on that, and they were reaching the point where it was, not really going to scale much more. And so they switched off of Zapier and built it bespoke, piece by piece. So that is the key question, I think, for no code, low code, is once you prove there's a market for it, how do you remain a tool that people want to use? How do you remain hopefully part of the end application and product? Because then you have something valuable. Otherwise, you're just going to have customers that come in and out and don't stay in a consistent way.
I agree. I completely agree. I think that basically no code is going to completely revolutionize the early stages of building startups. But then I also think that there are important paths that people have and decisions people have to make once you reach, let's say, $100,000 in revenue. In terms of the capability to scale, like I see apps that have sort of 250,000 users and like monthly actives, or people have processed really large amounts. But I completely agree that in certain circumstances, like people might have to switch to kind of like, okay, we've proven this out, we've built a bunch of stuff, now we need to scale to 100 million people. That's only possible if we make these specific code changes or if we build this out custom. But still, like it's funny because it's like one thing is building the core software as well, and the other thing is running the company. So it doesn't matter. You're always going to be partially no code, right? Like when we talk about no code, it's just about being able to manipulate or to interact with a computer without coding, right? So as you say, you were talking about abstraction. Again, this is just code abstraction. It's just saying, let's make the coding experience more visual so that instead of having to write every single line of code, we actually can use the logic that you would use in like an Excel mixed with the design kind of things that you would use in PowerPoint, and behind the code completely populates, right? So I think that that's like and listen, I completely agree with you. Some people definitely are talking about scalability, like the CEO of Bubble, like, yeah, that's something that everyone in no code, especially the people building the core components, like where like they allow you to build soft like SaaS platforms, or they allow you to build the core technology as the center of the business. They're definitely like, okay, how can we scale past like 500,000 users? How can we go into like 30 million users? And I think so that's something that's constantly evolving. But the funny thing that I noticed is like most people are kind of like, oh, no code. And the reason for it is because when it became very publicized, maybe 5 years ago, it was not at all there yet, right? And right now we're reaching a maturity point where it's a perfect time to use to basically, and I think that since it's visual programming and all humans are more adept to visual tools, like we process information way quicker visually, like much more, like a much larger segment of the market now can build and can run businesses. And it's going to be crazy to see what that means in the 5-10 next years.
Yeah, absolutely. I think that one of the keys to being retained and staying within an enterprise or a business over the long term is if you abstract something with a lot of edge cases. because that is very difficult to build and rebuild as a customer.
What do you mean by edge cases?
So payments is a pretty good example. It's easy. It's relatively easy to build that yourself, payments. But then there are a lot of edge cases. There's so many different payment processors, and then every region has a different tax code, online versus offline. And there are all these different cases, and they can be hundreds or thousands long. And Stripe has spent 10 years, I think, solving for all of those edge cases in their application. And so you get to have all of them solved with one sort of API endpoint. Versus Shopify, it solves the front end for you, and it solves the processing. But at a certain scale, almost everyone builds out a custom experience, custom either on top of Shopify or completely offline, because they've reached that point. Because there are not as many edge cases with just a visual e-commerce experience as they are with payments. And the cloud is another thing like that. There's so much complexity to scaling. And AWS has solved all those problems, and you get it for pretty reasonable fee, and that's going up. So using no code or low code to abstract complexity is a really, really good way, and edge cases is a really good way to remain a tool that people depend on.
Yeah, and that's super interesting, actually, edge cases, because I think that a problem early on, right, is like people aren't focused enough. But also on a specific market, right? They don't choose that. They don't really find that perfect beachhead market, or they're like, oh, our tool works for everyone. It's like if Stripe came out and was like, we're doing payments for everyone, like they probably wouldn't have succeeded at the level that they had. Instead, they focused on like a first very small segment, proved that out, were able to get to a certain level, and then they're like, okay, the next, to be able to open up these other markets, we have to adapt certain more specific things. And that's something that is so important. At first, early stage founders, forget about the edge cases right now. Focus on the core use case and what that specific target segment is like. Even if it's just 1,000 people, in your hometown, there's probably 1,000 more people in every other hometown. And then once beyond that, it might not be scalable for VC level. But as you say, with all these edge cases, so that's interesting, the idea that you start off with a beachhead and then you go deep into that. But then for VCs, it's really interesting to see that this has a much larger vision as well in terms of being able to hit these other markets with these edge cases.
Yeah, I mean, ultimately, we want it to be a big company. And hopefully the tools you use can help you scale in a very cost-efficient manner. I mean, that's the whole point of APIs and no code and low code, is it's often better and it's much more capital efficient. And that's the whole, if it wasn't, then nobody would be doing this.
Exactly. Yeah. So let's shift a little bit the conversation into talking about fundraising, and more specifically, I wanted to hear your opinion on sort of how important storytelling is in the fundraising process, the first impression, et cetera, et cetera.
Yeah. This is one of those drums which I beat to death. I think storytelling is the most important piece of fundraising, because there's a lot of uncertainty in venture capital, especially at the earlier stages. That defines the industry, I think, and it defines our job as investors. We don't know everything. Anyone who is claiming that is probably somebody you should avoid. We have a pretty good bird's eye view, a 10,000-foot view, but it's being a mile wide and an inch deep. So there's a lot of uncertainty, especially around how meaningful is this problem you're targeting? Is this the best way to solve that problem? What is the scale of this market? How big could it be? And it's especially difficult if you're trying to create a new market. And so there's a lot of uncertainty. And the way you can fundraise, the best pitches I've had, the best decks I've seen, are narratives. They tell me something about the past. They tell me something about the present. They tell me something about the future. And they tell me how you and your company fit into that. And you sort of weave a narrative in my head, which puts together all the pieces of data and experience and anecdotes you have, and weaves it together in a very powerful way, and gets me excited. And the reason that's important is that's how we process the world as human beings, through narratives. There's a great book about this, which basically goes into how every culture has these narratives at the core of them, these monomyths they're called, and stories that define the cultures, but also are how we transmit history. History used to be oral. And that's just how our brain seems to be structured. And if you hit that sort of attack vector when you're pitching a VC, you can almost suspend disbelief in a lot of people, because we're designed to be skeptical. If you really tell a compelling story, you'll help suspend disbelief. And then most entrepreneurs don't realize that I will bring a deal into the firm, and I then have to fight for that deal. Right? Everyone's going to be like, "This is an amazing deal." Some people are going to be, against it or have issues with it, which is good. That's part of the process. I then have to story tell for you within the firm on why this is a good investment, why this is a real problem, why this is the future that is going to happen. And so by giving that narrative to me in the pitch, you make it much easier for me to story tell to the firm, which increases the likelihood that you will get through the process.
Yeah, and in that way, it's actually very similar to enterprise sales, right? Because the person you're talking to is going to have to go and talk to a bunch of other people behind it to get the consensus to be able to get that check signed, right? So that's great. I love it. And I love the idea of talking about the past, present, and future.
Some firms are structured a little differently, where people will have up to a certain amount they can just write themselves, checks of 500K or whatever. Depends on the firm, and this is to my point earlier that every firm is different. But usually the bigger, more meaningful checks, there has to be some level of consensus.
Love it. Very cool. So, okay, let's go into now a final thing. I know that you have now transitioned into also becoming a writer. Congratulations. That's really cool. I'd love to know about one thing that's really exciting you about what you're writing, and just explain us a little bit, like in brief terms and in plain English, maybe, for people who are less familiar with some of these things.
Yeah, well, I enjoy it a lot. I've always enjoyed reading and writing, and I started doing this because it's sort of a forcing function, and there's an accountability to it by starting a newsletter, if you will, in that I have to write every couple of weeks. It makes me learn consistently, and hopefully cover interesting things. And there's that famous sort of phrase where 90% of people on the internet are browsers, 9% are commenters, and 1% are producers. And I wanted to shift a little bit into that area and hopefully produce some value for people. And then, to my point earlier, I'm messaging to the world what I'm spending my time thinking about and looking at. Cellular agriculture is something I've written a lot about. Lab-grown meat, lab-grown food products. That's an area I'm very interested in.
Nice. Go a little bit deeper into that. Like, what specifically in that interests you?
So I'm personally not too big of a fan of plant-based meat, which I'm sure a lot of friends are not going to appreciate. I don't think it's probably the healthiest solution. And I don't think meat consumption is going away. I just do not believe that everyone's going to stop eating meat across the world. Yeah. It's deeply ingrained in cultures and cuisines. So we need a scalable solution. And I think lab-grown meat, using cell culture, is that scalable solution. There are a couple companies attacking it, and it's pretty interesting. Memphis Meats just raised $161 billion from SoftBank, and they're doing that. And yeah, and if you look at it, cattle and the production of meat produces 14.5% of our carbon emissions in the world, which is a huge number. So as we combat climate change, we're going to need to target cattle production and make it more efficient. And it's also one of the biggest users of land in the world. I think the number was 2/3 of land is used in cattle farming.
Yeah, so I grew up in Brazil. It was a huge problem.
Yeah, exactly. And the rainforest is cut down for soy and for cattle, right?
Yep.
So I think targeting that problem and shifting to a lab-grown cell culture first world will, make hopefully meat much cheaper, more widespread, which has a lot of health benefits. Actually, if you look at countries where nutrition is low, adding meat to the diet makes a big difference. And then it'll solve one of the biggest producers of carbon and one of the biggest users of land. And it just seems
like solving like almost 5. Because I'm also thinking of certain things around animal cruelty. Like basically, there's like 5 problems that are happening around the production of meat. Some are ecological, some are sort of more economical. And yeah, this seems like a clear solution to that. But I think there's still a lot of stigma around like, what? I'm gonna eat like you're gonna take a chicken cell, you're gonna multiply it, and then I'm gonna eat it. So it'll be interesting to see, because as you said, in the same way that like kind of culturally meat is so ingrained in cuisine and all that, like these mentalities are also ingrained in culture. So it's so interesting. As in innovation, we're constantly trying to fight the status quo, and it's like constantly like a changing thing, and it's an uphill battle, because it's like, you know, once we've downloaded the software, let's call it, of ourselves, our culture, our, you know, our mindset, the way we, like, it's difficult to shift that. And you see that a lot more in older generations, right? Like your grandfather, like my grandfather, will never, you know, change his mind about something no matter what you put in front of him in terms of evidence, you know?
Yeah, absolutely. I also think economics can make a difference. If lab-grown meat is 1/10 of the cost of traditional meat, that's going to change people's thinking for a lot of people, because just pure economics, pricing, incentives makes a difference.
Totally. Especially since most of the world is in a, you know, we're moving towards a society, and we have been for a while, that's basically not willing to spend more, right? So it's like, if you look at the shift towards IKEA, it's clear that like people are happy to just have like shorter lifespan products that are cheaper.
Yeah, great company.
Yeah, absolutely crazy. Wow. So excellent. So before we leave, I'd like to ask you, like, what is that you're trying to push forth? I know that you're doing a lot of writing, and that's awesome. But what do you see as kind of your impact in, you know, in your work, in, you know, personally? I know it's a really loaded question, but I always like to, you know, if you tell me that you want to go to a yoga retreat once a year, then I'll take that too.
Yeah, no, it's a question we probably all don't think enough about.
Yeah.
I'll tell you my honest belief. I think all investing is impact investing. I've never understood the difference. You know, maybe impact investing is a little more socially focused, but if you look at companies like Zoom and the technologies that we all rely on in a world that is shut down, these are all built by Silicon Valley. They were financed by venture capital. And that has had a tremendous impact. It's made the world more resilient in the most difficult crisis we've faced for 100 years. So I hope my impact is the companies I invest in, and the impact that they have in some of the more, you know, archaic industries that we invest in, manufacturing, logistics. They're very inefficient. There's a lot of waste. Can we make them more efficient? Can we make them more effective? And then, you know, with a focus on LA, you know, move to LA because I see it as being the next big tech hub in the US. And, you know, I'm trying and thinking a lot about how can I accelerate that? You know, how do we get some of the students in the city more involved in the tech ecosystem? How do we get some of the legacy industries to be bigger players in the tech industry? And how do we, you know, create smart policies at the regulatory level to ensure that housing remains available, to ensure education is available, and to create incentives for businesses to move here? Are there tax incentives that we can put? How do we make this an attractive place in the way that places like Dubai or Singapore or Hong Kong have done that very effectively, have made it,
and very quickly too.
Yeah, exactly. Yeah. LA has that capacity, and it's a great place to live. So I'm very interested in accelerating that.
Yeah, I'm super excited about what's happening in LA, and I think that a lot of us share that feeling, where it's like we're all, you know, collaborating towards a common goal, and the idea is to like really help each other to reach that, and to embrace like that we could become really like a, you know, huge hub for entrepreneurship. We're already a very big hub in the US, but not compared to some of the other cities. And I think that, yeah, there's a real incentive to move to California as well, you know, the California life.
Yeah.
So
high taxes, but high sunlight. So you have to make your
exactly. Exactly. Great. Well, Mikal, thanks so much for joining me today. I wish you the best in your mission to sort of empowering founders to make an impact in the world. And I look forward to continuing to chat with you later offline.
Absolutely. And to anyone who wants to reach out, it's just, you know, Mikal@wavemaker.vc. I'm pretty good at responding to email. So always happy to chat. It turns out I'm spending a lot of time at home these days.
Yeah, that's so weird, right? I don't know. Yeah. Anyway. Cool. Well, you have a great day. Thanks so much for being on the show, and we'll see each other soon.
All right. Have a great week.
You take care. You too.